down to 49 and then 32 and then 16, you would have been so upset. You would have thought this was the worst company ever. Why did you even get into JPMorgan Chase, the World Reserve Bank before the Federal Reserve was a thing in the United States of America? The lender of last resort. Their stock in 2001 was at $49 per share, $50 per share. A year later, it was at $16 per share. A year later. And for the people who are short-term minded, they would have said, and I imagine they said, oh, JPMorgan Chase is dead. JPMorgan Chase is done. It's an awful company. Do you see their stock price is down 60%, 70% over the last year? What a crappy business. You should sell JPMorgan Chase. The same thing happened in 91 for JPMorgan Chase. Their stock crashed. And the same thing happened for many other banks. Wells Fargo being one of those companies. It happens. So JPMorgan Chase, if I recall correctly, did fall from $54 in 2000 to $16 in 2002. You know, the bubble, the .com bubble. It got caught up in all of that too. What an awful business JPMorgan Chase must be. But then I think, back to today, back to now, and it actually turns out that JPMorgan Chase is the top bank in America. JPMorgan Chase is so far ahead of everyone else, it's not even funny. They are the Apple in the banking world. JPMorgan Chase, whose stock crashed 70+% in a single year, it turns out they're actually a pretty good business. The stock was crappy. If you were an investor who entered JPMorgan Chase in 2001, 2000, even 99, and you rolled it up to the $54 mark, $55 per share, and then you saw it come down to 49, and then 32, and then 16, you would have been so upset. You would have thought this was the worst company ever. Why did you even get into it? Why did those people, those advisors, those wealth managers tell you JPMorgan Chase was a good investment? Why would they tell you that? Can't they see that in the short term it sucks? The reason they told you that is because they actually think more long term than most people. They realize that the business is what you're investing in, not the stock. The stock is just a short term and immediate quantification of the sentiment in the market at any given moment. The stock price is just a proxy of emotion among the investors in the market. The stock price is a representation of human psychology at any given moment. It's not a representation of the actual underlying value of the business at any given moment. Over the long term, those might get closer together. Those might converge, approach one another, and become more efficient. The market becomes more efficient over the long term. But in the short term, you can't judge the actual business surely off of the stock price. And so I think back to my investments today and investment that you have. You might be being invested in a growth company, a young company, even a big cap company that's struggling right now in the stock market, but a business is doing well. And you might be tempted by all of the fear and the Federal Reserve's aggressive actions in the market right now. You might be afraid that your company actually sucks because the stock price is down. You might be convinced by all of the short-term minded investors who are actually just day traders who are not making even minimum wage, because most of them barely crack that in a year of doing your day trades. But for some reason you listen to them and they tell you, oh, sell your shares. And you say, yeah, that makes sense. This company does suck because the stock price is down right now. It was up yesterday. So yesterday the company was great. Amazing company because the stock was up yesterday and last month. But because it's down now, awful company. Why did I even invest in this? And you sell. You run away. You take your ball and you go home. And then the stock price turns, it goes up, and you just knock yourself outside the head because you thought, oh man, why did I sell my shares? This is an amazing company. Now I have a fear of missing out. I'm going to jump back in at a higher price. And when I sold originally, when the short-term people told me to sell, I got charged taxes for any profits that I made. And if I lost, I lost. I just lost. I didn't get charged anything, but I still lost money because I bought at the highs and I sold at the lows, which is exactly what you want to do if you're an investor. Buy high, sell low. And now I want to get back in because this company is just going to be amazing. It's the next best thing because the stock price is up now. So whenever these market moments are happening, remember they're moments. These are short-term things. The Federal Reserve has a cycle. They have to stimulate the economy and then, of course, bring it back down and get it back to a stable rate so that things are at an equilibrium. And they're going to do that all the time. They do that. Every once in a while, they're going to increase the spending in the economy, and then they're going to say, hey, you guys got too happy. It's just too much excitement in this market. Exuberance. Let's bring this back down. Let's cut the music a little bit. And then stocks will go back down. And then people will be sad. And then the Federal Reserve will say, okay, let's put the music back on. And people will be happy. And those who left and sat out will want to come back in, and they'll be too late to the party and not fashionably. And they'll get charged a nice cover fee. So just settle. When your emotions get high, remember that you're investing for the long term. That it's not a short-term thing. When you got into the market, you're supposed to be investing money that you're planning to keep in it for the next 2, 5, 10, 20 years. Money that you want to just put there and let it work for you, so that eventually you don't have to work for money. So that you can actually have a chance of retiring. You don't get there by letting your emotions get the best of you. Letting the day traders and the swing traders get the best of you and tell you to sell your shares when they want you to, because they actually bought puts on your shares. They shorted your shares and they said, we believe this stock is going to go down to 50% of its value right now. And we're going to do that by making sure that there's enough fear in the market that those people who are very much lacking of conviction in their investments sell. And if they find enough of those people and get them to sell, then they get what they want on your back. Don't let them have that. Just, at least not on you. At least you need to survive. Those who don't watch this channel, those who don't try to learn about how this stuff works, they'll get caught. But don't let that be you. Stay invested. Of course, I'm not a financial advisor. This is not financial advice, but this is what I would do. Just stay in, continue to dollar cost average in whenever I can, and just wait. So long as my businesses are still operating correctly and making money and plan to make more money next year and are following their plan and actually delivering on what they said they're going to deliver on, there's no reason for me to sell. And the same goes for investors who are long-term minded, and I hope you are too. That's all for now. I hope you enjoyed this, and I hope it was helpful. And if it was, consider liking and subscribing. Thank you, and I'll see you again next time.